Andrew Holland, CEO, Ambit Investment Advisors, is joining us right now. Andrew, it's always a pleasure having you with us. Great getting you. Let's talk about how are you approaching the markets. It's a pretty interesting time. We have wrapped up most of the key data points, and now we are about to enter March. Obviously, elections would be garnering a lot of attention, and market participants would start to focus predominantly on the election outcome. So, how should an investor navigate this maze of not so encouraging data flow, but a lot of political talk here and there? Is it a difficult time? Is it going to be a difficult time for the markets up till the elections and the outcome?
I think it is. In fact, you caught me on a morning when I'm feeling particularly bearish. Not necessarily anything to do with India, although the voting account and the kind of budget figures or the figures for the fiscal deficit are just wishful thinking. For the year ahead. So whichever government gets in, they're going to have to relook and bring us all back to reality, because that just can't happen. But why am I particularly bearish at the moment is more global factors. In particular, what's happening in China, I think is starting to, it's just been ignored really. I think people are hoping against hope that nothing really is untoward there, but all the numbers are pointing to more problems, particularly in the shadow banking and trust sector, and expect more negative news to come out in the next month or so. So I think March is going to be particularly difficult, led by China. And if I think about what's going to happen in the US now, the kind of bad weather is abating, then I do believe that growth will quicken again, and tapering will happen quicker, and we'll start thinking about interest rates rising. So all of this, I'm afraid, doesn't help a lot of the emerging markets which still have problems, which is obviously Turkey, South Africa, Indonesia in particular, and that will spread to India as flows become negative. So whatever the politics are in the very short term in India, I think it's going to be overshadowed by the problems globally emanating from China. So I think we've probably seen the best of the market in the very short term.
So should one be prepared for lots and lots of volatility up ahead, and should one actually stay with the defensives here? Is that the broader underlying theme that one should focus on?
Yeah, I mean, you're going to see lots of volatility. As regards, should you buy into defensives? I mean, the IT sector is the only sector we like now in the defensive farmers. There's still a lot of regulatory problems out there emanating from the US, so it's a sector I can't really sleep at night very comfortably. And the consumer stocks, I'm afraid, are going to start to see the full effect of a consumer slowdown in terms of spending. So with valuations around 30 to 40 times, there's no room for any disappointment there. So yeah, in the very short term, if you're playing a relative game, you're going to get relative performance, but you're not going to get absolute performance. So we'll keep with the IT sector in terms of the only defensive sector we want to be buying.
Andrew, let me drag your attention towards what's happened in the power space. On one hand, we have incentivized private sector utility companies like Adani and Tata Power, whereby bringing in a compensatory tariff relief. On the other hand, CRC norms for FY 15-19 to some extent have been hugely negative for NTPC. How would you approach what's happening in the power space, these orders and their implications on the sector?
I think we're going to wait. I mean, the utility sector is actually a sector we like, but it's a middle of the year story onwards, along with our kind of newborn market for India after the elections. So it is a sector we like. Would we chase the stocks today? The answer is no. It's a little bit like the telecom sector. There's a lot of moving parts at the moment, and I think what you're seeing today is going to be a trading buy rather than it's a long-term buy. So we'll wait for the prices to correct, which they definitely will, given the expectation that the market will fall. And these are kind of sectors and companies that people just don't want to own at the moment. So good for a trading rally, but certainly not for buying at the moment. Valuations are not cheap enough, so we'll keep our powder dry for this sector and not chase it. So it's a sector we like, but not for today.
So you don't think that this is going to lead to a structural re-rating for Adani and Tata Power?
No, not at all. I think what we're going to see is obviously litigation will come in, and it'll probably be held till after the elections anyway. Held in terms of I don't think any of these will be followed through. I think there'll be enough litigation to keep this sector under a cloud. So I think till after the elections is a sector we want to buy, but we don't think the valuations are comfortable enough for us to be buying at these levels. So we like the sector, but I don't want to chase it today.
What about NTPC? I mean, hugely negative. For instance, most experts believe that the ROE for NTPC could get reduced anywhere between 4 to 5%. 17-18% is the estimate going the rounds right now. You share that view?
Yeah, I mean, I've seen the brokers' reports, and everyone's either become very negative or very positive on which side of the benefits come to the power sector. But again, at a valuation, I'd like to look at NTPC. I'll wait for the dust to settle. And if you think about what happened with the telecom sector, I mean, everyone got very excited that we're coming to kind of some form of semblance in terms of companies could increase tariffs, and then all of a sudden after the spectrum auctions, there's a lot of balance sheet stress again. So I don't think it's a sector I want to kind of play just on the power sector, that is, just on these announcements. I'll wait for the dust to settle. There's going to be plenty of changes in these recommendations, I think, before they're really played out. So again, I think it's something to look at after the elections, unless valuations become very, very, very attractive, which they're not at the moment. Even with the fall in NTPC, it's not attractive enough to start buying, but it's getting on the radar.
Okay. Right. Let's move aside from what's happening in the power space, Andrew. Let me get your perspective on what's happening in the banking space. I mean, we're all tracking virtually every day what's happening in United Bank of India. The chairperson resigned. She stepped down on health reasons, but no one really knows the extent of damage in United Bank. Then, of course, we have reports earlier which suggested that there's another 800 crore credit line which is not accounted for. Nobody has a clue on what basis those loans were given. Does that tell you that the concerns of NPAs in the banking space, particularly PSU banks, we've perhaps not really reached the full extent, and perhaps there's a lot more pain to go as far as the whole NPA cycle is concerned?
Completely, and I think if anyone was thinking that we're the NPA cycle or restructuring loans is over, was either wishful thinking or just hoping in hope that things would get better and the economy would recover. I mean, I think United Bank of India is really a proxy for really what's happening across the banking industry, whether that's for private banks or PSU banks. So it's a sector we don't like. We don't want to own it. You will get relief rallies here and there, but I don't think it's a sector you need to be in until possibly later this year if the economy starts to recover. But there's too many problems out there. There's too many loans being hidden by banks. If you speak to any good corporate, they'll tell you where the problems are in the sector, and they'll tell you which banks are holding on to that debt and trying to manipulate numbers so they don't have to show those NPAs or restructured loans. So the sooner it gets cleared up, the better. But I'm afraid, again, when I looked at the figures for recapitalising the banking industry by the finance minister, I mean, 18,000 crores. I mean, 18,000 crores a year for the next 3 years might be a more reasonable figure. 18,000 crores in just one go, no way. It's a sector which you don't want to own.
So, does that encompass the private sector banks as well, or do you think because of the valuation gap, they have virtually become perhaps very, very expensive? Should one actually stick to these stocks? Should one actually buy further into private sector banks, because they are the only ones who offer any sense of relief as far as the asset quality is concerned? Yeah,
it's like the kind of the laundry in the dirty linen basket, the private banks stand up only because the PSU banks are so have so many problems. But at these valuations, would I want to buy private banks? The answer is no. There's a lot of problems out there. It's going to take another 6 months to kind of unravel. And I don't want to be in any private bank at this stage, because I think there's quite a lot of problems. Interest rates are not going to come down very easily, and there's a lot of sectors which are under a lot of duress and stress. And whilst you see some of the private banks doing the name and shame, I think this is really just a pinprick in the whole kind of MPA balloon, which has to be burst before we get to the real figures. So I think everyone's hoping in the banking sector that the economy recovers, and then you get the kind of usual rewriting back of loans, or they don't have to be restructured. That's another 9-10 months away before you could even start thinking of that. So it goes back to what I'm saying in that the banking sector is well avoided, even the private banks, even the best private banks.
Yeah, let's get your perspective on what exactly makes you bullish. You mentioned earlier that you'll be in a slightly defensive frame. You would look to be slightly defensive in your perspective. Does that mean that IT still is a preferred sector for you? I mean, there's a lot that's actually happening. I'll get to that in a bit, but let's first talk about how do you perceive the technology space?
Yeah, IT is a sector that we continue to like, and we've been putting more of our funds, or investing more of our funds in the IT stocks. Again, it's based on the fact that we think the US and Europe will see a sharp recovery this year. Obviously the US more so than Europe, but that will obviously help the margins and the contracts or winning of contracts for the IT companies going forward. Apart from the usual blue chips in terms of Infosys and Wipro and TCS, we still like Tech Mahindra. We think there's another 40% share price rise over the next 1 year. I think the benefits of the merger with Satyam are still to play through. It's now in the big league. I think it's going to win a lot more contracts going forward, and the margin improvement should continue for the company. So I think 2 and 2 actually do equal 5 here for this merger. So we've seen some consolidation in the share price, but we'll start to see the next leg up for the shares over the next 1 year. So like the IT sector, it's the only defensive sector we like at the moment.
There was a report, and I'm quoting Wall Street Journal, which said that HCL Technologies founder Shiv Nadar apparently is looking to sell half of his stake, even though the company has denied, and I quote HCL Corporation, which said that HCL Corp denies any plans to exit HCL Tech. Does that have any implications for the stock? I mean, a lot of people actually in the IT space are holding on to this stock. This has been sort of a preferred pick in the IT pack, at least for the last 2 years, at least that's what I'm aware of. Does that change your perspective on HCL? What's happening in the form of news right now?
Yeah, I mean, it's difficult to comment on what he wants to do with his shares, and you're always going to have a conflict in terms of the timing and what shareholders should think about that, and can the growth continue. But hopefully HCL Tech is an organisation which is not built just around one person. Therefore, it will continue to do well and continue to grow its profits. Whether he has half the shareholding than he has today. So I'm less worried about those things. Obviously, depends on what price it's done and so forth. But it's not been part of our on our radar for in the recent months. It's been more emphasis where we feel there's a real change going on now, and that would be start to show through more in the margins as we go forward. But so Tech Mahindra remains the favourite below the kind of big 4 or 5 IT companies, and that's where we're continuing to buy.
Okay, Andrew, what happens in the telecom sector now? Auctions are over. The companies would start to pay the money in under the deferred payment plan, but the sense is that what's going to happen next is perhaps much more important, and I'm talking about consolidation that comes in within the sector. There are reports suggesting that eventually we are only going to see 5 or 6 large telecom players with the likes of Systema, Videocon, loop now already happened, being up for grabs. What does consolidation mean for the telecom sector? Do we see with consolidation better earnings prospects for the existing incumbents like Bharti, Idea, even for the likes of Arcom? And how do you put in place Reliance Jio's perceived strategy up ahead?
Okay, quite a lot of questions there, but you know, when we went into the spectrum auction, I think a lot of the consensus views in the market that, you know, was that the incumbents wouldn't really pay too much. It's going to be rational bidding, and you know that really didn't play out at all. Everyone's overbid. Everyone's going to have to leverage the balance sheet more, and you know it's going to mean that margins are going to be under a lot more pressure. So we come back to the wishful thinking, and the wishful thinking is, you know, that there's going to be a lot of consolidation, a lot of buying in between companies, and that will go back to rational pricing. Again, it's just wishful thinking. We have nothing else to say about the sector because it's quite negative. So let's try and think of something new, so consolidation becomes a theme. You know, who's going to rush out and start consolidating when you have, you know, Reliance yet to enter the market? And does anyone really know their strategy? I can't kind of articulate it because I don't know it. So, you know, I think you'd wait for that to play out first before you start going up buying every company you can to try and protect your margins. So I'm not a buyer into this consolidation, and I won't be for a long time. It's just hope value by some people to try and justify the fact that spectrum auctions were very high, paid too much, and balance sheets are now under pressure. So all those buy recommendations should really be sell recommendations.
And what was your analysis of what happened as far as the interim budget is concerned, even though it's a partial relief in the form of excise cuts? But do you think at least for some time they may actually help reviving the fortunes of the beleaguered auto sector? The excise cuts, which ultimately have been passed on to end consumers, may translate into some pickup in demand?
Yeah, the margin it probably will, but you know, is it going to change? You know, your outlook or my outlook to go and rush and buy a car or whatever? I don't think so. I mean, it might at the margin a little bit here and there, but it's not sustainable. It's only there till June, right? So we have to wait for the next government to be formed and what the next finance minister says. But the first problem for the next finance minister is that you know, he's got a wholly unjustifiable fiscal deficit target to try and rein in. So I think numbers will change, and I think the key will be whether, you know, core inflation at that time has started to head southwards, which you know, I think will be touch and go, to be honest. So at the margin, it's okay. Again, I wouldn't buy into the sector just because of that. We like the auto component sector more than we like the two-wheelers or four-wheelers at the moment. So we'll keep to our auto component picks and buy those. Those will be the beneficiaries anyway of any slight upturn. But there's a lot of competition out there, so I don't want to buy on the back of one duty cut which could be reversed.
Andrew, there was a news article earlier this morning, and the headline was "Corporate Investment at Decades Low." Obviously, that tells you quite a lot about what's happening in India, and this is something which we have discussed in the past as well, that how corporates are not really venturing out and investing aggressively, largely because of the economic gloom right now, but also the fact that they're waiting for a change of guard at the center. In your opinion, by when do you see a visible turn as far as the investment cycle is concerned? Would that only happen at least 6 months after a new government is formed, or do you think right at the onset of a new government at the center we might start to see some euphoria, some excitement, corporates starting to come out, committing investments on large projects?
Well, I think most of the sectors which we could think about have their own problems at the moment, and a lot of companies have overstretched and over-leveraged balance sheets. So, you know, I don't see corporates rushing out to throw more money into sectors, even if you do have you know, government which you feel more confident about in terms of the future. I think what will happen, and this is why we're more bullish after the elections, is that GDP growth will move from a growth of about 4.5% to 5.5% in 14-15, and that will be led by the government spending on infrastructure, and that will kickstart the economy. And that will have a multiplier effect. So all the companies with strong operational gearing, and there's many of them, will start to feel the benefit of that in their top line, and that will then benefit the bottom line because most of that falls through. So as you go into 2015, I think you'll see a much healthier kind of profitability at the corporates, which will then lead them to start investing again. So it's a 2015 story, for corporate investment to start to happen. So what you'll see is GDP growth pick up because of government spending, and then earnings start to really pick up for corporates because of operational gearing. And hopefully, if interest rates do fall at some stage, then they'll get financial gearing as well. So that's the story. It's not a dissimilar story to 2003 to 2006. And that's what we're basing our bullishness on from the middle of this year, where we see earnings kind of exploding going forward, and that will bring ratings, going forward well within the range of which you can see the market's enjoyable market.
Andrew, how significant is the upcoming gas price hike? I mean, I think from the April month we would see a near doubling of gas prices, which has implications for, I think, the entire industry, not only for power sector but also for the fertilizer space, and apart from that some other ancillary sectors as well. And broadly speaking, its impact on prices would be felt quite broadly. How significant is that a trigger right now, particularly from a stock perspective, whether it's ONGC, Reliance Industries or some of the other ones, or do you think those gains are already factored in?
I might have got cut off. I don't know.
Okay, Andrew, I was coming to you on the issue of gas prices. Okay, let's thank Andrew Holland. Andrew, thank you so much for joining us. It was a pleasure having you with us. Great to get that perspective on all those vital factors that we discussed have implications for broader markets up ahead as well.